Good morning, money magnets and master traders. It's your Uncle Charters here, and I'm going to cover futures, NASDAQ, and the gold for us this morning. Right now, we are looking at a daily chart of futures zoomed out a bit. The reason why I zoomed out the chart is because I wanted us to take a look at the previous all-time high for futures, which was not that long ago. It was just a few months ago back in February. And the previous all-time high for futures was at 61.66. And ever since we cleared that level back on June 26th. Futures has continued to make its way to the upside, setting new records. Now, you guys know I love the Fibonacci levels. So from the previous all-time highs, I started my Fibonacci levels and I brought it all the way down to April 7th low around 48.32. And of course, when we do that, we get Fibonacci extension levels. I was looking at the 1.236 fib level, which is at 64.81. And futures is so close to testing that level. And I'm wondering, can they get it done before July is over? So at this point, we don't need to zoom in and look at the more micro levels as far as the daily chart goes. And we can see that some way, somehow it gapped up. But this is coming after a breakout, because on my last video, we spoke about the doji. And we was watching out for one of two things that could possibly happen. Either an evening star pattern play out, or we get a bullish continuation. And the way we did that was we was watching the range of the doji, which was a low of 63.91 up to 64.18-ish. And you can see on Friday, we closed above the high of that doji. So technically that was a breakout and it led to a gap up. But from what I'm seeing right now, look like there's some profit taking in the pre-market. So we need to watch out for the levels and the setups so we can get an idea of what can happen next and what moves or what trades we can take. So based on my fib levels, these micro level fib levels, I have one at 64.45. Futures attempted to gap above that level, but now it's breaking down. So the next support level that I'm watching is at 64.31, which was last Friday's high, and also the fib level at 64.23. If it's pullback time as usual, I need to see those pivot levels break down as support and go retest the 5 daily moving average, which is very close to one of my other fib levels at 64.06. So yes, if we get a minor pullback, a healthy little minor pullback, we want to see those levels break down: 64.31, 64.23, and 64.06 at the very least tests. But if we're going to get a deeper pullback, then all three of those levels must break down, with the main one being 64.06 and the 5 daily moving average. If that can happen, we can definitely drop all the way back down to 63.43, the last micro level pivot high that I have here. And that will be a very, very nice move to the downside. But it would start with a breakdown of 64.31, 64.23, and 64.06. If you do play any pullback setups, I would play it level to level. But if we want swing trading, I need to see price close on the daily chart below 64.06. Moving on to the NASDAQ, similar situation as usual. We're gapping up, but we're seeing some profit taking here. For this profit taking to be more serious, I need to see 23.462 fail as support. That's the current one. And if that happens, 23.416, 23.370, and 23.314 would be in play. Uncle Charters would be bear bias and favor a multi-day move to the downside below the 23.370 level. That's a breakdown of fib level support and a close below the 5 daily moving average, which the bears desperately need. Now, if we are to head to the upside and not pull back, resistant is at 23.527, 23.585, and 23.610. If we can recapture or break out those levels, we can definitely go and head up to the upside to set new records. And I do have a macro level fib level target at 23.677. Can the bulls hit it? We'll find out soon. And last but certainly not least, here is gold. It's been pulling back. Last Friday, it actually broke down the 20 daily moving average. This morning, it's retesting the 20 daily moving average as resistant, and we are getting a a little bit of selling pressure to. So today, the bears will have an opportunity to confirm the breakdown of the 20 daily moving average that they did last week. If the breakdown is legit, support at 33.25 must fail to put 32.86 or lower in play. If we lose that support level at 33.25, I would take the rejection from the 20 daily moving average more serious. But if we remain above that support level, the bulls could be going for a recapture, false breakdown setup. And if they do get back above the 20 daily moving average, which is around 33.45, back above that, I would favor a bounce up to 33.70 plus area. And above 33.75, I would be bull bias again on the gold. Thank you so much for watching. That's what I have for you guys this morning. If you guys enjoyed it, definitely hit the like button. If you're not subscribed, definitely subscribe. Welcome to Uncle Charter's YouTube community, and good luck today. Peace.